Time now for Futures in Focus. Oil is headed for its longest winning streak since the summer of 2017. It's a cocktail of Chinese stimulus, Fed dovishness and OPEC production cuts. Let's go to the CME, where we're joined now by Knuckman of Agora Financial. We're closing in on $50 a barrel for WTI. Alan, do we get there today?
Not quite there just yet in the front month contract of February, but that $50 is very important psychologically because that market had traded, oil had traded between 50 and 55 for many weeks before this latest breakdown. But I think oil also really is all about the macro market. You look at the chart patterns that you see in the oil and you see in stocks, and they're almost they're almost exactly the same. So we saw new relative lows and a higher weekly close in stocks a couple weeks ago, and we built on that bounce. We've seen that same rally reaction in crude oil.
What happens, because with the shutdown we're not going to get things like crop reports, we're not going to get things like inventories. Is that going to make a difference to pricing?
I'm not so sure. I focus on price as opposed to news. So unless there's a major aberration, the markets have already factored in what they think those supply and demand dynamics are. But looking at oil, we were so oversold, just like we were in stocks. Let's talk about stocks again, because the concern in oil was that the global growth had slowed, but stocks are almost double-digit percentage-wise off their lows in just a few sessions. So very, very oversold. Let's see how crude reacts when it gets back in that 50 to 55 range, and then where it moves from there. A move up above that 55 would target 60, and that's the midpoint of this action that we've seen on this straight down move.
So, normally it would be surprising, but in this environment it's not that surprising that we're getting a massive bounce once again, just an hour and a half into the trade for equities. S&P up 16 points, 2/3%. The Dow up 0.4%. What is the thinking every morning when you come into the CME there, Alan, about what's going to happen with the market, no matter what futures are doing?
Well, there's always opportunity, but I want to say today is really the official start of 2019. The last couple of weeks were holiday weeks, and what we're seeing is a shift in sentiment once again. What we had happen in the last month with all this unwind, giving back the gains from 2018 essentially, you saw the markets tumble, but what we're having happen right now is you're seeing people buy the dips as opposed to selling the rallies, and we're able to hold gains. So I can look at that as a very positive sign here in the marketplace, and I don't think things are different, or I don't think things are broken more so than we've seen in the last 9 years. We've had sell-offs and profit taking, and we bounce back each and every time. Let's remember, interest rates are ridiculously low once again. We've seen the yield on the 10-year note come down to 2.5%, straight down. So markets are starting to, believe it or not, markets are starting to behave normally, where we saw the stocks sell off. You saw flight to quality into gold and to yen and to treasuries. And so that's more of a normalization of relationships. I view that as a positive.